Hello, everyone. Welcome back to our weekly financial lessons with the Money Matters series. All right, so today with our investments, our stock investments, we're going to speak about the timing of your stock investments. All right, timing is key. All right, there's never been a better time to invest in stocks. There's never been a better time to educate yourself on stocks than right now. I spoke about this earlier this week. If you follow me on my personal page, um, sometimes you have to force yourself to the next level. Sometimes there's never going to be a rosy period or a peachy period in your life in which you say, you know what, I think right now I'll learn stocks with all my money being right. Sometimes you have to force yourself to the next level. It won't happen unless you force yourself. You got to throw yourself out into the playing field. All right. So when I first learned stocks, I had to literally just transfer over $500 into a investment account. I was willing to learn. I was willing to lose. I was willing to do whatever it takes to force myself to the next level. I knew what stocks were. I knew what the definition of a stock was, but I hadn't had the experience. So sometimes you got to learn by experience. Experience is the best teacher. So you have to force your way into the next level. Don't be afraid. Just force your way to the next level. Do whatever you have to take. If you got to invest in some education, you have to invest in resources, and that's what I bring you. I bring resources. I give you free information, and then I have my stock course and club in which you could get actual information, learn, and some actual resources to take along with you, and some coaching. All right, so that's what happens when when the time will never be right. Go ahead and force your way to the next level. All right, so that's the timing in that perspective. Now, the timing in stocks you want to monitor is you always want to monitor the right time to invest in a stock. All right, timing supersedes everything. Timing supersedes even the product itself. You can have the best product but the wrong timing. All right. Example, in the coronavirus crisis pandemic right now, and this as it pertains to the stock market, Zoom is the best scenario of a timing issue. All right, so Zoom has increased over. It has more than doubled itself. That's more than 100%. It's went up about 120% as of now. All right. However, you have already missed that time, as I said in the other video, for you to jump in. All right, that's an issue of timing. You always want to be ahead of the jump, ahead of the curve, ahead of the spike in the stock market. All right, now you can have the worst product, and if you have the right amount of advertising and the right amount of publicity, you can get in a stock when it jumps up, before it jumps up, because of all of the hype and the publicity and the everyone's the media, and when it spikes up, you can actually go ahead and get that gain and be out of there. And then when everyone finds out that this company is really not who they say they are, you could have got out. So timing supersedes actually the product. So you always want to monitor your timing. All right, so you have to be. Now, the other aspect of timing is when you get into and you start to learn stocks, you have to be patient. All right. What I'm not understanding is how some of us, and you know what I'm talking about, are willing to be patient with some things and not with others. All right. So let's get right into this. All right. Learning stocks. What I always get in backlash about learning stocks, and throughout the years, the 10 years that I've been learning and teaching others, I've always get the predisposition or the hesitation of, oh, you can lose all your money in stocks. I don't want to. I'm not investing that. You can use all your money when you invest in stocks. However, when it comes to materialistic things and fashion and technology and things like that, people are really willing to just throw money away. All right, so you're willing to put $250 into a designer belt, $500 into a designer belt, $250 on your feet, in which once you start walking around the room, it is no longer worth $250 if someone steps on your toe, but you're not willing to invest $250 into the stock market. The stock market is actually equity, ownership, equity in which you could actually see again. Once you scuff up those $250 pair of shoes, you will never see that money again. All right? You can't sell it to anyone. The next month, that $250 is a sunken cost. So how could you be willing to invest, to not even invest, throw away money at late fees, credit cards, throw away money, $250 there, but you're not willing to see your money, be able to practice patience and see your money again. A lot of us, with the timeliness of investments, we want instant gratification. You're not going to get instant gratification. We want to double our money, straight double your money. That's because we're not willing to do what it takes to get to that next level. We're not willing to wait on the money, right? So a lot of people don't want to get involved with stocks because they want to, oh, how much can I get my money back tomorrow? Yes, you can get your money back with a return, but you may not double it. All right. However, we're willing to take a chance on a game like this Cash App octagon circle thing that everyone's at. You're willing to put up $100 that you may not see again, but you're not willing to buy into something that, if you do it the right way, you did your right research, you bought the right resources, you educated yourself, you put the time in and actually network with the right people, which the opportunity that I provide is you networking with the right people with experience that have done so before, and you researched the company and is a credible company. You will not take a loss if you do your research, if you do your due diligence, all right? But you will take a loss with a $100 gain that you just want to, you got to get 8 more people to do a Ponzi scheme and shoot the money up, and you got to rely that people are still adding other people. No. So you're willing to you're willing to lose $100 that way, but you're not willing to put $100 into equity in which you may or may not see it again. If you put $100 into the stock market and it shrinks by 20%, you still will have $80 3 months later, all right, in which you can cash out and get into another equity or another company. But if you put $100 into a Ponzi scheme, you will never see your money again. So that's you got to be willing to be patient with your time and investing in stocks. All right. So let's just talk about the market conditions. We're going to talk about right now what is going on this week. The market being the week of the last week of April, the market is kind of flat right now. I'm going to warn you guys, as throughout my experience, there's going to be a second wave of basically a market crash. There's always the initial impact in which everyone knows what happens, but it hasn't been supported by data. It hasn't been supported by the facts. The damage has not been realized. Once they put a number to the damage, investors are going to react. Supply and demand. The stock market is all about supply and demand. Once companies pull out, or your 401k companies or the fund managers, once they pull out of a stock, the demand goes down. When the demand goes down, price goes down. All right, you have to put yourself in a position to be ready for those opportunities. For the investor, those are opportunities, because when the stock market crash, it might, just because of demand alone, it may affect companies that has nothing to do with with the facts of their revenue, their industry, their season. Like Netflix. Take Netflix. The price of Netflix might suffer just because people pulling their money out of fear alone, right? But we know that more people are home. There's a all around the world, 1 billion people are home watching Netflix, right? And they're overperforming. They're hitting their 52-week high. But because of supply and demand alone, a crash, it can affect their price. That's an opportunity for you. All right. So the second wave is coming. You have to be ready. All right. Now, stocks to watch coming up. You want to watch Facebook. Why? This week, Snapchat reported 11 million daily user increase. 11 million. Their stock price jumped 20%. Facebook is the industry leader. They are far beyond Snapchat. All right, Snapchat is a new product. You know, it probably caters toward the kids. Now with Facebook, now their users they're in a billion users. All right, so if Snapchat's users increase, you want to watch Facebook. Facebook is the industry leader in social media. They own other products that has nothing to do with social media, just in case they can't get you on social media, such as WhatsApp. WhatsApp just reported in January active 2 billion users a day. 2 billion users. WhatsApp. And when you're in home in quarantine right now, you don't think family members are talking to each other. A lot of people use WhatsApp to avoid carrier costs, that international carrier costs. So that's more usage. There's my mom, your dad, your aunt, your uncle, your grandmother, your great grandmother. They're on Facebook right now, and it's going to be more than the time that was this time last year. All right, because we're all in quarantine. All right, so that is another reason that you got to keep your eye on Facebook. Their stock price is actually right where it normally was even before the market crash. So that is an indication that you might Facebook may be in for a big one. It'd be an interesting watch coming up. They report prior to the first week of May. All right, so you want to keep an eye on them. Just always be aware of your timing. All right, with your investments. All right, you want to be before the curve. You don't want to be after the curve. Okay, so this was this week's money matters lesson. The timing of your investments. All right, make your decisions. Make your research. Do your research. Do what you have to do to be timely on things. All right, everything is not instant gratification. All right, everything is not doubling your money. No investment guarantees that you're going to get 100% return on ROI, return on investment. None. Not even real estate. With real estate, you can fix and flip a house for 3 months and get a 60% return. And you have to be okay with that. All right? But it's all about building upon. Building. It's the rule of 72. All right? If I divide 72 by my profit, that's when I will double my money. All right? So continue to do these things. Practice a little patience. All right? Be timely with your investments. All right. Thank you guys for continuing to join. Thank you guys for your interest in stock market investing, in real estate investing, and all types of questions that I get. Continue to like, comment, and share, and I will see you guys next time.